All right, good morning, everybody. Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. How is everybody doing on this fantastic Thursday morning? So the markets are open. I've been a little bit busy this morning doing some things. Got a little bit of news to announce later, but we'll get to that later. First things first, let's get to Bitcoin. So basically, what we've been looking for is a test of the 21 exponential moving average on the weekly time frame. This is the Coinbase data feed. That's the data feed that I use on TradingView, but I take my trades on Bitget, the Bitget platform. So the price is a little bit different, but everything else is the same. The candles are the same. The moving averages and everything are the same and structured the same way. So basically, I just look at this and then take my trades on the platform. And what we're currently waiting for is 25,810. I honestly thought that we would get that level last night when the market opened a brand new day, but you can see that it went almost down there and then reversed. Now, there is some news out of China that is big news. I mean, they're essentially going to allow miners and traders and exchanges to come back. All they have to do is register. So yeah, we'll see what happens with that. There are some, that is really good news. It could end up leading to good news, but obviously we need the United States of America to do the same exact thing. Figure something out that way in order to basically onboard all the people that we have lost through the all-out assault that we have seen on the crypto market in the US. So right now, this is currently what we have on the daily. Yesterday, you broke down below support. Support would be the lowest bearish close in the range. There it is, 26,752. You can see how yesterday's candle basically made it right through there, and that's pretty much the midpoint of that candle. So until we get back above that, that could ultimately end up being resistance. And technically, you don't even really need to get back up there. So we'll see what happens. A lot of sell side pressure in the market yesterday, and that was across the board. We've seen a lot of the other risk markets, the S&P 500, the NASDAQ, the Dow Jones, and the Russell all down yesterday as well. The US 100, which is the NASDAQ, is getting a pop based on the NVIDIA earnings. Essentially, there's like 10 stocks that's keeping this thing up. So when you have a situation where we have right now where the DXY is obviously in a bullish climb and has been for a couple weeks now, and you have a bullish climb on tech as well, that's something that typically does not happen together. So we are seeing a lot of risk off sentiment, if you will. Let's go over here and look at the Aussie dollar. Remember what I said, Aussie and New Zealand pairs are generally treated as risk on assets. So if, the market is happy and we start to get back in a bullish mode, then the Aussie dollar and the New Zealand dollar, you would see them start to get a pump. That has typically been how the market works, right? The Japanese yen and the Swiss franc are considered risk off assets. So you would expect to see those pumping at the same time that the Aussie and New Zealand dollars are dumping. That's not what we got going on. Aussie is dumping, that's for sure. I don't have NZD over here. Let me go to the green list as I got it over there. Just bear with me. Right here it is. So Aussie and New Zealand are both dumping. Why do I not have the yearly opening range set on this? Give me 1 second. I apologize, but it is very important. Right there is your yearly opening range. So basically, both assets done the same thing. Since the year open, you had to climb above the yearly open, then you drop below it, set a new yearly low, and today we have taken that new yearly low out. All right, so you can definitely see that they are selling the riskier currencies. Bitcoin is traded as a currency, unfortunately. So as long as the DXY is climbing, you expect to see these things coming off a bit. The pound suffering also with the decline of the dollar, but not as viciously as the Aussie and New Zealand currencies are. And that's because, like I said, they are considered risk on assets. So we're getting mixed signals in the market, is what I'm trying to say. The bond markets and everything else is all jacked up. You got the dollar going up. You got some risk assets moving up in the way of stocks being tech sector alone is pushing the stock market up. So that, to me, it does look like there is some risk coming, and you can see it right there. Let's go look at currency futures themselves, and you can see that every single one of them are down. That is the Aussie, New Zealand, Canadian, Japanese, British pound, euro, Swiss franc. All of them are down on the day, right? So the Swiss franc was pumping, so it did look like a risk-off environment. The Japanese yen was pumping, and it did look like a risk-off environment. Now, both of those assets are falling with the New Zealand pound and the Aussie dollar. Now, during the 2022 bear market, we did see a separation from the risk off assets when everybody basically just put their money in the dollar and that was it. Nobody was putting their money in other assets, not in bonds, not in treasuries, and not in the VIX. That just was in the dollar. It's literally the only thing that was pumping during 2022's bear market. So we have not basically breached the 50% retracement of this initial down move, but you can clearly see that you are trying to structure yourself bullish over here, right? Today, right there, that yellow line right through there, that is your yearly opening range. And like I said, the midpoint of this weekly candle is right through that level. So you can see that that is where a lot of volume was being thrown down. Basically, people were looking for shorts there. I was one of them, to see if the dollar was just retesting the yearly opening to then roll over. So as of right now, what it looks like is the dollar's breaking out. So as long as the dollar is closing weekly candles above the 21 exponential moving average, and the weekly, and closing weekly candles above the yearly opening range, that means the dollar's trend has changed back to bullish. And if the dollar's trend has changed back to bullish, then obviously that means that we could see more downside on Bitcoin itself, and on the tech market. All right, so let's pull up NVIDIA real quick. You can see this thing is just absolutely flying. Has made a brand new all-time high, right? Brand new all-time high on the earnings call. So this is a short squeeze. You can see where it started, right? It started at this weekly swing high right there. Nope, right there. It is a monthly swing high. There's another monthly swing high, and then your all-time high. So you can basically see how this reacted, started to sell off, came back, test the 21 exponential on a daily time frame. That is typically when you have a very strong trend, when the daily 21 is literally capturing as support. And then you have earnings. Earnings was it was good, right? It was a hit. So you got a nice pump. So now all the shorts in NVIDIA are stuck. That is why you got such a massive move to the upside. That is what I was hoping would happen on the S&P 500 as well as the NASDAQ and Dow Jones. But since it's not happening, we have to think that, something's got to give eventually. When all the sectors are just a couple sectors are bullish and the rest are bearish, people are now starting to basically hedge their risk positions. So you do have investors obviously investing in tech, right? You wouldn't be seeing this massive move up if they were not. However, they're also investing in the DXY and buying VIX calls to basically hedge against any downside that could come. Because if you get a sector rotation out of tech and into the dollar again, you're going to see probably you could be revisiting the lows again, or at least the yearly open on a lot of your tech plays. We currently have a bearish trade on this asset right here, but we did that via put options. We bought the 135 strike put, and basically all we're waiting on is this is our expiration right here, Friday, June 9th. We're just waiting for price to get under that 134.81 mark, as that would put those 135 puts into profit. And then you can take profit after that, or if you think that gap will be filled, or at the very minimum, you could let price potentially fall to at least the 21 exponential. That is if it falls. It doesn't have to fall. Right? You tested it yesterday. That was the low. You did liquidate that low, and then you had a little bit of a bullish bounce, and you opened up on the highs today. So this literally could be a buying opportunity. It's coming into daily support right now. So obviously, we got to get this thing needs to break down below daily support for that trade to work out. As far as a trade on Bitcoin, a lot of people did buy this dip based on the Chinese news. It is good news. And, $25,000 Bitcoin, I'm not going to say it's cheap, but, it is still currently above the 21 on the weekly. However, on the daily, we have broken down. So we have been looking at short trades. Now, the other day, I was looking for this to break out this day here. We were looking for it to potentially break out based on volume by time, which is something I very rarely ever look at. And I wish I didn't look at it then, because we was looking at potentially taking a short for for that day before we broke down, because volume is decreasing, even though price on the sell side is decreasing. Typically, when price is decreasing, you see volume increase, right? Volume increases because you have more sellers jumping in, and you have buyers stop losses getting triggered, and you got new buyers stepping up, expecting a reversal to happen based on the fact that your selling pressure is going down, right? The amount of volume to actually sell the asset off is going lower. So we were potentially looking for longs, and then yesterday basically screwed that up. So I did something I never ever do. I took a short at support. That is something that I tell you guys to never ever ever do, because typically, if an asset's bullish, support's going to hold. So basically there's daily support right here. And yesterday I was looking for the short, but by the time I got to the desk, I was a little bit late yesterday. We were already trading under daily support. So essentially I just took the trade at the intraday support, which was there. I waited for price to break down. Once it broke down, I took the short entry. I took profits on the move lower, 70% of the initial position size off. I still have 30% of that trade on. Now, if you think the China news is going to be bullish, then what you want to do is you want to watch daily support mainly, and daily support now will be right there. That's also going to be today's opening price, right? So that's daily support, but you can watch intraday support as well. So what we do is we look for intraday supports on the hourly or the 2 hour, any time frame under the daily time frame that gives you the obvious range. So there is pretty much the obvious range. So it's daily support and right there. So this is the operating range that we would look for trades. Since we're trading well above the operating range and we only have wicks through it, you do have a 1-2 hour closure up there, so you could technically push the operating range up there. So it looks something like this. So as long as you're trading inside of this operating range, this is where we would be looking to take positions. Now, the reason I can't get short, the reason I cannot get short on it right now is because the risk would have to be up there, and this would be the potential target, right? Because we would just expect a pullback. But you just come off of overbought conditions, right? And I don't really typically use the RSI under a daily. You do have bullish divergence happening there clearly. I mean, that close is there. This close is lower but higher on the RSI. So as of right now, you can see intraday, you have momentum starting to build to the upside. So you need to clearly see resistance hold. There's 1 minute and 50 seconds left on this 2-hour candle. So as long as it closes under, then you could potentially look for a next push up and then short. And this would be your downside target. But remember, you're coming off of an oversold move. Now, it's not oversold on the daily, so this can continue. It can continue down, lower. Anything on the hourly, though, and the 2-hour, like, you pretty much tagged the bottom end of what we would consider shortable. We don't want to look for shorts when we're down in this region. Why? Because we know price oscillates, it bounces. Sometimes you get in a trend like this, a very brief trend that it was, but mostly we've been chopping sideways. So we still haven't broken down. Our bearish target is still down there. You can see how your bands started to tighten as volatility was not happening. Yesterday was the first time that we got actual volatility, and you can see how it opened up yesterday. So yeah, as long as you're trading under this yellow line right here, you have to expect more downside. But if you get above that, then you're going to be looking for a topside check. So my advice would be simple. If you're going to look to be a buyer at support. I've already showed you where that is. That is going to be 26,122. That's this price right here. If you believe that price is going to go up today, you can be a buyer at the open, which is right here. Right there. So I wouldn't buy that, but you can. Depending on how much risk you're using and leverage and all that would determine, what. If you're just buying Bitcoin to hodl it, then you can buy it at any price. So we'll wait and we'll watch right here, and we'll see if this ends up failing and becomes a move to the downside, because it could take a couple days still to play out. So you can literally chop sideways for 2 more days, then run down below this low down here. This is our ultimate bearish target. And I would expect that to be hit before any bullish move were to actually happen. Similar to how it played out at the lows, right? Down here at the lows, when everybody thought the low was in, right there. See how you traded sideways in the range for multiple days before you finally ultimately went down and took out that low. Well, this is the lowest low that we have in this current range. So if we lose this low, which is 25,810, my next downside target would be all the way down here. Right? Because that's the next area of support. Potential support. Even on the weekly, you can see that your last 2 areas of resistance here and here are well under that daily area. So, I mean, you could break it down and look even on the 12-hour. That's going to be the next area. Let's see if you got anything on the 8-hour. Nothing. 4-hour. Nothing. So literally, if you lose this area and you get downside continuation, this will be the target, unfortunately. And that would ultimately put you under the daily or the weekly 21. Right there is that price. You can see the 21 is right there. Now the weekly 21 and the weekly 200 simple are both still underpriced, But on this week right here, you tested the weekly 200. Now, the more times you test a potential area of support, then the more chances you have of it breaking down. And here you are now trading up against that. So people will ultimately be looking to take bullish positions here. My only problem with it is yesterday we broke down below support, and the support that has been holding for a long time. If I were going to be bullish off of this test, what I would have wanted to see is yesterday go down, tag it like it did, and then close back up above support as it did here, right? You traded down, you tagged it, and then you closed up here. But you still broke down then too, because this was the support at that time. So you're breaking down. Each time you get a bullish push, you don't get much more than a day before the sellers show up again. So ultimately, it doesn't look great, but this is also the time when you could see a big rip simply because of how many people are literally short in the marketplace right now. Market's open. Let's get the daily open back up here so we can watch it. It's also going to be support. We are going to watch to see where this thing closes today in reference to today's open. We can also get an idea of where most of the volume is being thrown down if we look at the session volume profile. And it doesn't really help us much. Right now, the point of control is midpoint of the daily range. Not quite. It's a little bit more to the upside than it is to the downside. So it would suggest that there is more selling pressure happening. Yesterday's point of control, which was big right here, mostly selling, it looks like. I guess you could say it was about half and half, but clearly the rest of it was mostly selling all day. The volume was definitely mostly selling. Today, you could say that arguably you have a little bit more buying going on. But notice down here, people were selling. The yellow is the sell side. That's sell side orders that comes in, right? Whether you're selling to exit a position or opening a new short position, you are a seller. And that is checked off as volume, right? Sell side volume. So this is a volume profile. It just shows you where the volume traded at which price. So point of control currently here. If price gets under it, then you can look for price to run down below today's low, which is right there. You just made a fresh daily high not too long ago, and you've been trading sideways ever since. So there really is no way to put any risk against this. For you to use this low down here as your risk mitigation, you would simply be looking for price to get almost all the way up to yesterday's high in order to do just a 2-to-1 risk to reward. I don't know what you're doing. We like to do the intraday trades, the small trades, the one where we can get in, get out, take some money and run. Currently, S&P 500 is neutral, pretty much unchanged on the day. The NASDAQ is up, but like I said, that is going to be based off of tech. Apple's up. AMD's up 8%. So AMD got a nice rip off of the NVIDIA news because there was no earnings for AMD yesterday. Earnings for AMD was back here in early May. So you can this looks like a short squeeze, right? And it's all based off of NVIDIA. It's based off of AI. All the news from AI has got people buying into tech stocks because of AI. So I don't think that you need to worry about buying now. I told you guys to be a buyer down here. So you should not be looking to be buying up here. If anything, you should be taking profits off of those positions that you took down here. You never want to buy the highs, especially when everything is jacked up like it is right now. The entire marketplace is jacked up. Jacked up. It's hard for anybody to get an idea as to what is going on, right? Google's going to be a big player in AI. Amazon's going to be a big player in AI. Basically, anybody that's anybody in tech, Microsoft getting a bounce based off of Nvidia alone, getting above a massive swing high. I mean, a lot of your tech stocks are very close to all-time highs. Apple, all-time highs there, right? And AMD, a little bit further to go for all-time high there. So technically there is value there if tech continues. If this isn't just a run above the high and then we see a dump again. I don't think that's going to happen myself. Like I said, I think as long as inflation trends lower, people will be buying stocks. The early people, they got in early. Those are the people that are making money. You don't want to be buying it today. I don't think I'd be selling it either. Where it is. There it is. I don't think I'd be selling it either. There's too much hype right now. This stopped out a lot of people. So that initial open run lower, that's just basically a lot of selling happening because people are going to take profits as soon as the market opens, right? I mean, wouldn't you if you bought at $299 and then you were up almost $100 on however many shares you hold? That is a big gain. It's up 25%. Like, that's huge to anybody's portfolio. So upon the open, you see big sell side come back in, and then you're going to have other people jump in to be a buyer because we know retail loves to buy the top. I'd say give this a couple of days. Eventually the gap should fill because the dollar is ripping, but it has been ripping for a while. So everybody is definitely confused as to what to do, as what the market's going to do. I still believe that the dollar is ultimately going to finish the year down. That is how I am positioned. And obviously I am positioned to where I ultimately think Bitcoin is going to finish the year up. However, if we go back in time and look at Bitcoin on the yearly time frame, you can see this is what I tweeted out this morning just to kind of show everybody, yes, this is kind of the 4-year market cycle. I know people are getting sick and tired of hearing about it, but it is what it is. It's all the data we have. This is a very young asset. So, but looking back in the past, every single time you've had a bear market, you had, the blow off top or whatever where people began to sell, the top of the cycle. You had 2 years of sideways. First year was down, next year sideways, and then the halving, boom. Also, what's funny is each one of the halvings are also on election years. I find that to be pretty amusing myself. So I think the halving won't be the only thing that plays a part in the bull market for 2024. I think that you're going to have to wait until November. Wait until the election happens, because I believe the election will probably have a massive reaction or cause Bitcoin to have a massive reaction. The halving has been enough in the past to cause people to jump in. But as long as the U.S. funds are standing by because they can't legally trade it, then they have to wait, right? They have to wait until they can. So we need U.S. funds to be able to buy it. A lot of them are, still participating. Elon Musk is getting ready to put Bitcoin into Twitter. You got MasterCard looking at Bitcoin right now. There are companies in America that are still in this and that are still going to participate. But in order to get like the cycle blast offs that we've seen after the halving, we need everybody to participate, right? You need the market cap to go up. In order for the market cap to go up, that means more buying has to happen. You have to have more buyers to push the market up. Until you get that, you're going to see sideways to choppy markets. Choppy up, choppy down, right? It doesn't matter either way. But there's a clear obvious pattern there. So, I mean, this year right here was a beautiful test of yearly res. Right there, boom, right? So that's 13,899. We don't want to see price get back down there, but it is possible that it does if we get back under the yearly open. But once the bear market candle closed in every single scenario, here on January 15th, you did have a run low, but ultimately closed the year above support. You've done that every single time. So even if we do get a run lower, we want to see this candle close bullish in December, right? We want to see this thing at least green. And then we can look for the next year, wherever it is on the yearly open. That's where you want to be a buyer typically, because you can see on the yearly candles, even if you would have bought, except here. If you would have bought on January the 18th open, you would have lost money. Same goes for January 1st, 2022. But we were sellers here. We were not buyers. We were sellers. All right. So, yeah, that's what we currently have. Let's go intraday here. See what we can do. So the VIX did ultimately pull back. It's trading at 1942 with a high of yesterday at $20.81. The SPY is gapped up above where the options market priced in the low of the week right here. So the options market on the SPY priced the low of the week to be somewhere around 40 or 412.07. So you gapped up this morning, but you're trading back down to it. So let's see if this holds. 412 today. We want to see it close above 412 or at least 411.91. And then maybe Friday we could see a bullish pop, right? But that's still going to bring next week's range down. So you got to close above this black line in order to make next week's range higher. So it does look like it is kind of trying to top out, but it did that here as well, right? Lower, and then higher. But unfortunately, we came down. So it does look like a bull trap. But it's still, in a range. So as long as it's in a range, trade the range. Buy support, sell resistance. You're back under the open. And you can see that people are indeed buying up here. That's not really great. More people bought around 26,423, which was the high, and then more people sold at 26,391. That could be these people that bought selling once price starts to drop. But yeah, my advice would be to wait for a resistance and just sell it down to support, right? The range we discussed earlier. I'm already in the trade, so I guess I could take the trade on a different side of the platform here. On the Tether side or the USDC side. Ended up being a fantastic trade. It just looked like it was going to break down. But that news we got yesterday could be a game changer. Or CZ thinks so anyways. CZ, the guy that owns Binance, thinks it's going to be a game changer or potentially could be a catalyst. So wait for support. to be a buyer. And you got a long day still to go, guys. Right? Don't think that you have to rush in and buy this thing right where it is, or you're going to miss out. You're never going to miss out, whether you take a trade or not. You're not missing out because the next day you'll probably give us a better opportunity. We had the ultimate opportunity yesterday if I wouldn't have changed my mind. We would have been in the sell side from up there instead of being in the sell side here. But the ranges are definitely, you are definitely breaking down. So not quite an outside week. We didn't take out last week's high, but we more than took out last week's low. We're trading under last week's low right now. Let's see where that is intraday. So this is last week's low right here. Yeah, not looking like people are buying it up. Based on yesterday's close, it was bearish. So, but you gotta buy. That's when you gotta be a buyer. Typically, you have two big things that are basically holding price up right now. And just because it did initially hit the first time and still we're testing it again, it does not mean that it can't get bullish. All we need is buyers. So that 200 simple looks silly intraday. 26,274 is where it's saying it's at right now. It's hard to get 26,275. I guess that is where it is currently. So you want to be a buyer off of that? Where could you risk? Under it. But still, you're going to need a fresh daily high in order to make money. Big volume here. It's because of that. Let's look at volume by day or by time. It's only natural that we get more volume. That was a big volume bar on that. So that volume bar right there was huge compared to anything we've seen in the last 5 to 6 days. Longer than that. For the last couple of weeks, that's the biggest volume bar we've seen. All right, what do y'all think? That photo is my new dog. It's a beautiful dog. Good morning from cool Minnesota. Hong Kong will become Asia's crypto hub. Yeah, it will. Good morning. Possibly. I mean, there's still a lot of crypto exchanges in Singapore, which also brings me back to what I was going to talk about. Bitget is wanting to partner with me in a sense by if you use my code in the description, you got to use the link and then the code XTSC. And then if you deposit $300 and make a trade, right? You deposit the $300 and make a trade, that'll give you access to the Discord community. So we're working on that right now. If that's something that you are interested in, you can hit me up on Telegram at Trade Talk. But you'll have to have validation that you did indeed do that deposit. If you didn't want to go about it the other way, for U.S. citizens, I'm working on trying to get you guys a platform where you can trade the inverse swap perpetual contracts, because that's the way to That's the way to basically manage your risk. So if you can't or don't have access to Patreon because of a country you live in, this is the way for you to participate in the Trade Talk Discord. Because I have several emails of people, not being able to do that. So you, depending on where you live, if you have access to trade on the Bitget platform, it is the platform that I trade on, then you can use that code, deposit $300 in Tether or Bitcoin or USDC, make one trade, and then you'll get access to the community. All right. Link is in the description, and my name is simply Trade Talk. So that's how you find me on Telegram. All right. So this is going to be, that was a pretty big candle to the upside here, and it did barely close above the older resistance level intraday. Yeah, I would probably play it safe. This is last week's low. We don't want to use that price. We would use this price. The 2 hour is much lower. Yeah, I would use the hourly high. As long as you're trading under it, closing under it, this would be your target. The 200 simple. So that wouldn't be such a bad trade if we get another retest of 26,398. 26,398. You can look to take a short entry. You can use the high of day as your risk. Make sure you do not risk more money than you can lose ever in a day trade, because intraday price action is very volatile in some cases. But we've seen this play out so many times. I mean, you can just look back here when this candle was made. Then you came down here, set the low. This is the daily open. You set the low. Boom. Where did you trade back to? Right there, resistance. So if it's going to remain to be choppy, which is probable after a big day, down day like that, then you would expect this area to hold as resistance, and you would look for price to rotate back down to support, as that is the operating range that the market has set forth. Now, if you get a breakout above the range, start closing hourly candles above each candle after, then obviously you do not want to sell it, because you're breaking out and the market is going to set a new high on the day and set a new range. But as long as you're closing under this would be a good area to look for entries. Just because you've already tested it, it does not mean that it will not test it next hour or even this hour. So keep an eye on 26,393. That's the area where you'll be looking for entries. And then my first take profit would be probably before you even get to this candle's area, because that could end up being support if you start trending, which currently you are. If you look at the open, you set a low and you're trading back above the open. So currently you are trending to the upside, but that can change so quickly. You're barely up on the day. So it looks like a lot of buying pressure, but you can clearly see the difficulty of it to get higher. It's been trying for the last 3 hours. There is no real way to get a good buy going on here. That's where the 200 weekly is, and you do have an area of intraday resistance there that you wicked to last hour and that you currently tested this hour. So you could ultimately use just the close of this as your risk, and then you would just need to get back up there. Now, it'd be a very small percentage move, so you'd have to use a little bit of leverage in order to make a couple percent. And then once you do that, you got to make sure you clear your fees as well. You don't want to take a trade if it's going to be break even, because usually a break even trade means you're going to lose money. Generally, if you're a market maker, not a taker. So here you go, getting ready to test that level again. Bots and algos will buy this price. Okay, there is a test of that level. We got 33 minutes left on the close on the hourly. Or 30 minutes. Not 33. 30 minutes. The high of day sets at 26,489.89. Nvidia is basically trading. What in the hell is BMR? It's up 158%. All right, we're not really concerned about that right now. Or you could wait for a fresh daily high as well. As long as you don't get continuation. There really is no news today, is there? I haven't even looked at the economic calendar, but it's kind of too late now. It's 10:30, so any of the major news would have already happened. You had pending home sales, 0.0%. But I mean, it has not been trading the way it should have been. It should be trading. It's actually up, even though it's red. It's still up from last month. So you did get a slight move off the dollar on that news, but nothing major. Price is reacting to that level. That is where sellers are going to be. But we'll see if the buyers have the day or not. Good morning from Giggleswick, England. Is that a real place? Giggleswick? That sounds funny. No offense to the good people of Giggleswick, but it sounds like Harry Potter location. Yeah, shorted Riot yesterday's high. Let's go look at Riot. That would be so you're doing good. So you're up, well, not quite a buck. But depending on how many shares you buy, I mean, really and truly, you don't need a whole big move. Like, you got 1,000 shares of that. You don't need that big of a move in order to make a lot of money or to make a decent amount of money. It's just the amount of shares you use and then the risk or the leverage you put on it. But that was a decent place to be a seller, man. I mean, it was the perfect place. Did it happen at the beginning of the open? I wonder. Because you opened there, traded up to it, and then dropped. It happened all in a 5-minute swoop. Boom. Down. Yeah, it wasn't a bad trade. It was not a bad trade at all. We just need this thing to get going. Amazon not having such a great day. S&P 500 down on the open. If you continue to make lower lows after 11 o'clock, then the high of the day is probably set. But it wouldn't take a lot to get back up to the high of day. This is high of day, not according to the E-minis, but according to the SPY. So that's high of day on the SPY. It says last week's open, but I know it's wrong. That is last week's open. Just filling the gap. $412. Remember on the other platform $411.91 or no? It's right around 412 is the options market expected low of the week. So this could close up on the day easily. This being a bear trap, you've closed the gap. So if it's going to go up, it should start doing it sometime soon. Bitcoin is still struggling with that resistance. What if we already have Bitget accounts? Well, you're already in the Discord, aren't you? I'm pretty sure you're in the Discord or were in the Discord. Maybe I'm wrong about that. If you already have a Bitget account, then just go through the normal way. Patreon. All the links are in the description. We didn't take a trade today. Not yet. So there wasn't an actual trade posted in the Discord for today. If I was going to trade that would be the direction that I would take, right? I would look to sell this level right here. See, this is that hourly resistance. And notice this volume node here. Thanks for all your great mentoring. You're welcome, Tom. Tom's been around for a long time. Tom's been around since back when I was a big key member in the CTM community. If we were to get above the high of day, I would expect a snap of like a real nice move up. If you just get barely above it and roll back over, then you're probably going to close back inside today's range. Where, it's anybody's guess, obviously, but it just depends on what kind of news comes out today during the day, right? Because news does come out during the day. I could take the sell on that right now. Here, let me do something real quick. Let me manage my money. Let's do this. Small amount of money because the trade was yesterday. All right, so let me get the leverage situated. We're going to watch it now. So we're getting closer to the close. Let me get a line on the platform. On Bitget, the hourly actually held. So on Coinbase, it didn't. Shit. Let me get this ugly thing off here. So you can, this hourly candle held this candle. So this candle actually closed under this candle's close on the Bitget platform. So that's typically where you'd be looking to take your entry. So what I'll do is I'll go ahead and take a short. I'll mark it in with a short right now because it is being tested. All right, entered short, and I'm going to risk the high of day simply because it's almost 11 o'clock. So that usually works in the E-minis, but Bitcoin trades 24/7, and then since it's got so many different futures, every exchange has perpetual futures contracts. So some stock market information that we know to be true is not relevant in Bitcoin. Like we know after 11 o'clock that there is a 68% chance that the high or low of day is in, right? So typically that would mean at 11 o'clock, if you're trading at or around the highs, you would not be looking for a short because that would mean that you're probably going to see a brand new daily high. But I got it situated. Let me get my stop up there. 26,474 would be the price on Bitget. 26,474. That would be the stop. Boom, and there we go. So stops up there. So in order for me to make at least a 1-to-1, let me pull up that weekly 200 again because, man, I know how things are. This is the one I want. Why is that always so big on the hourly? So just down to this candle's low would be a 1-to-1 risk to reward. And that's where that 200 simple is setting. And since this is not really, you can see that once support was set, you tested it during the London session, right? Right there. And then you got a boost. Higher highs, higher lows. You did not take out this, but it is a fresh high of day because this candle is the open. So this made a fresh high of day here, and then this made an even bigger high of day. So that's the high of day. This is this is nothing for yesterday. Yesterday's high is way up there. Right? Yesterday's high is right there, 27,225. So you're not going to hit today's or yesterday's high unless some really huge news comes out that is extremely beneficial for Bitcoin. But you could definitely close on a higher day, on a higher high. So we'll see what happens here. Short USD CHF. What is my leverage? 25x, but I only used half of the position, my friend. So half of the position with 25x leverage. Because if you use 25x leverage and enter here and get your risk up there, you're going to lose probably 10 or 15%. Right? So in order to make that less, you got to use less position sizing, less leverage to get a higher or a wider stop loss to still lose, around. I suggest you try to do it at 1% increments. That way, if you get a 2-to-1 risk to reward, you gain, 2 to 4% on the profits. But the way crypto moves with leverage, sometimes you can get 10% and up to 15% gains in a split second. That's why crypto is so fun to trade. It's volatile, very volatile. Usually when you have a big down day, the next day is going to be sideways typically. Right? Usually when you have a breakdown or a breakout, you get a sideways day like here, big strong breakout to the upside. The very next day was a very small range down day. So we would expect breakdown this to be a very small range up day. So the trade really, not the greatest idea in the world. Unless you were to get up to like 26,744, that would be a fantastic short entry. And an even better short entry would be this supply zone right there. Now, it doesn't mean that, price will get up there today. And obviously, if price gets up there today, I will be stopped out. But I don't mind, right? Because the money I made on the short trade yesterday, I am not going to give that money back. That's why I'm doing such a small position size. This is just to basically take the trade, which sometimes gets me in trouble on YouTube because the better trade was earlier. But if you were to get all the way up there today, then I would say more is going on also based on this right here. This is huge. It is huge. It's definitely a big moving average. Your 200 simple. No, you were getting breakdowns on the 3-day. See, that's what makes this asset sometimes so difficult to trade. Right here, you got a nice breakdown, a confirmation breakdown, and in the very next session, 3-day session, you traded all the way up and liquidated the breakdown candle. Now, if this would have closed bullish, that would have indicated that this was a trap, but it didn't. It just liquidated the high of day and then boom, down. So you can see where the sellers were setting. They were just setting right there, waiting, licking their chops. I myself would have been waiting for the high of the week, but you didn't get there. But you don't need to get there because you already tested that wick low with this wick. So literally, this could stop anywhere it wants to, according to inefficient markets, right? Inefficiencies and whatnot. If you trade that way, I don't because it doesn't work that often. I stick with what works for me. All right, how long have we been live? An hour and 10 minutes. So basically, this is my setup, right? For anybody that join or comes in later or whatever, I'm just risking the high of day, the current high of day, which is this wick, off of this resistance level. And I'm looking for very best of 1-to-1 where I will take profits and then I'll just move my stop to break even. And if it gets downside continuation, my secondary profit taking zone would be here. And anything after that, I just leave open. So yeah, that was the entry. You may get another chance of it at it. And then again, there's nothing that says that this entry is even going to work. That's the way trading is. We don't know what's going to happen, so we have to just find high probable areas. This is a high probable area to operate. If it doesn't work, you wrap it up. You know what I mean? You close your computer down for the day. You wait for the next day to give you another opportunity because there is an opportunity every single day in this market. Every single day. You could take a trade every day during the New York session. But it's getting late for like in Singapore right now. It's 10:51 at night p.m. So for a lot of people that live in other countries, it starts to get late. So they're probably better off to trade like the London session. The London session has pretty straightforward trades in some cases. Like when the middle of the range, like if you have a daily low and a daily, and you're trading like in the middle of the range during the London session, then it's not such a great time to look for trades in the London session. But if you're at a fresh daily high or a fresh daily low during the New York or London session, you literally can just take the opposite side of the trade and you'd be right like 60% of the time. Like if you're making a fresh low day on the London session at 3:00 a.m., you just buy it. Or opposite, if you're making a fresh high of day, you sell it. Because the London session caused the higher low of day often. 31 people watching, only 16 thumbs up. Come on, people. Yeah, people don't like the bear markets, man. When I first started this YouTube channel, I would have 4,000 or 5,000 people watch the live streams. Now I get like 200, 300 people watching. But it's a bear market. You know what I mean? I am talking to the people that want to learn how to trade. That's who I'm talking to. I don't care how many it is. The people that want to learn how to trade. You can literally change your life if you know how to trade. Know when to trade. Know where to trade. Know how to minimize your risk. There's just a few things you need to learn. And you got it. Because you're trading against yourself. So once you control your reactions and emotions and stop doing all the things that you're supposed to not be doing, like revenge trading, over trading, all the cliched things you hear. Once you stop doing that stuff, you're gonna get good. You're gonna get better at it, and you're gonna see it work. I mean, there's people inside the Discord that are making money right now. Some people know that there's not always a trade to take. Let me go look at USD CHF before I shut it down. I forgot about you. I am very sorry, Run Mountains. Hopefully you're still here. Short USD Swiss franc. All right, so first off, I can already say I don't know if I'd have taken that position based on the simple fact that the dollar is up and the Swiss franc is down, right? The dollar is up and the Swiss franc is down. But that could change later on in the day. What you would need is the Swiss franc to be stronger than the dollar in order for it to go lower. All right. So you either need USD weakness or CHF strength in order to make this short work. 90655. Damn, you almost top ticked it. But you haven't really went anywhere. Right in here is his short entry. I know why. Just by looking at the chart. He took it based off of yesterday's high. He waited for a liquidation of yesterday's high and he got short. Boom. That doesn't always work. Like I said, it's best if you have news. Lucky for you, you did have news at 10 o'clock, and that is literally helping your trade. As far as taking profits, I would be doing it now, my friend. You're at support, intraday support. Right here's the daily open. So this is the lowest support. You almost wicked to that. It's a very tight range. If you would have taken profits at the Heath level, right there is where you would have wanted to take profits. So good trade. It's just, because we can't expect a breakdown. We only operate within the range the market gives us, right? That's where the money is. The money is in here. When you see people do stuff like, I'm going to get short here and down here is my profit target. Those people don't know what they're doing. They're not real traders. Unless they're literally trading the weekly range, right? You also took out last week's high. That's a little bit lower than your entry. So I'm assuming you took it out when you took out yesterday's high. But I mean, you can see it, right? This is the range, right? This is the money. You're a seller here, you're a buyer there. It's that simple. That's the operating range. This is where we make our money. Sometimes we lose, right? Sometimes we don't make money. Sometimes we lose. But if you risk small, you lose small. Once you get good at this, you're going to make, 2 or 3 profitable trades a week and lose 1, 2. But you still end up closing the week out green, and that's the ultimate goal. So if someone's trading a whole week's range, I'm going to buy the low and expect it to get all the way back up to the high. Not on Friday or Thursday. I wouldn't expect that. But, if you're looking for next week to potentially get back up there, I could understand that. But not for a day trade. They just haven't, they don't know what they're talking about, or they just haven't been in the markets long enough to understand that the market sets a range, and in that range is where you look to operate. That's the open. We can get rid of it because the open is in the middle of the range. This is the range. That's your high resistance. That's your low support, right? So this is the area you look to operate in, and it's already been set. Resistance, boom. Support, you got a bounce, a retest, confirmation of support, boom. So if we're going to trade range bound and potentially close red today, what we want to see is it slowly drift right back down. Now the problem is you have a bearish candle here and a bearish candle there. So those are 2 potential areas where your trade can stop working, right? Because it's in a current trending formation. Since the London session, you've been trending up. So taking a short during the New York session, you're basically betting that the London session was wrong. The Asian session set the low of day. The London, then it closed. That hourly candle closed. And then the London session shorted it right back down to support. Because at that time, before any of these candles were here, you can simply back it up and you can see, right? Here's your open of the day. There's your high of day. Then you trade lower. Retest the open of the day. Boom. Big down move. Boom. Back up. So that almost looks like a capitulation wick. Intraday, though. Not on the daily, it doesn't. Intraday, it does. But you got to bounce off of that support. And then the London session showed up and said, hey, we're shorting. Down to support. So this was the operating range. Right? Here and here. That held as support. And now we're trading at the high. Around the highs. So literally every bearish hourly candle can act as support. You've got 3 of them inside of this daily range. This one, and this one. Let's see how the market reacts to it. Boom, bing, boom. Down, up, down, up, down. So we'll see how it goes. But that's the entry. That's the risk. The 200 simple comes right here. So that's why we're just looking for a 1-to-1. We'll take profits and we'll leave the rest on to run where as low as it wants to go, right? If it works. So set a limit order to take profits at 26,280. However, if you end up getting stopped out before your limit buy gets filled, your profit taking area, then you must cancel that order. Otherwise, if the market ends up coming back down, you will get filled on that position. And if it continues to go lower, you will get liquidated if you got your computer off. You don't remember or don't realize that that has happened. So be careful when doing that. 2629. Take profit. I'd say since it's just a small trade and I'm not really looking for nothing major out of it, I'll just take 60% instead of 70. Take 60% off, leave 40% on to see what happens. See if we get any downside continuation. All right. Thanks for what you do. No problem. Thank you. All right, good. Wait, is the high of day 5 p.m. yesterday? That depends on where you're at, Wayne, and what platform you're using. So I'm in New York, and I have this set at UTC4. I don't know if you can see that. Yeah, you should be able to see my time zone. That's New York session. That's the New York time zone. So for me, Bitcoin closes at 8 p.m. Eastern Standard Time. That may be different for you, right? Because some platforms make the daily close on Bitcoin at midnight. So you just have to change it to New York time. But I mean, no matter what time you're in or what the daily open is or what time that is for you, the price action should be the same. Like what you're looking at on your chart should look the same as what I'm looking at. No matter the close or the open, because it's a 24-hour traded market. And I'm looking at an hourly candles. So each hour, you got your close and an open of a new one. All right, so we're gonna wrap it up, guys. If you have any questions, just drop them in the comment section below, as I will answer them. I do answer them when they appear. Remember, if you can't have access to the Patreon and you do want to get in the Discord, you can deposit $300 to Bitget and make one trade, and you will get access to the Trade Talk community. All right. That is something new that we just figured out, and we're going to give it a shot, see how it works. You guys have a fantastic rest of your day. No big news, not for tomorrow. Oh, wait. Do we have big news tomorrow? Yeah, we have PCE tomorrow, so we'll probably do a live stream tomorrow morning, bright and early. Wait, PCE isn't a 3-star event? Yeah, there it is. Core PCE, 8:30 a.m. So we will watch this. This will be important. It's not moved, so this is why they're saying that inflation is sticky. This hasn't moved in a few months, and the last other one did. The last one we had, CPI, barely moved. So we'll see what happens. We'll go live tomorrow morning and watch the PCE. All right, you guys have a fantastic rest of your day. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody. Oh, Johanna will watch that video for sure. I'm gonna go get breakfast for me and my girl. She's off today, so we'll have breakfast and then I'll watch that video. It's a long video, but I'll give it a watch for you and see what I think. All right, we'll see you guys tomorrow.